Leases Part 2. Accounting for leases by lessor. A lessor classifies each of its leases as either a finance lease or an operating lease. Classification of lease by a lessor. Finance lease or capital lease is a lease that transfers substantially all the risks and rewards incidental to ownership of an underlying asset. Pinapasa na yung substantially all risks and rewards ng assets kay lessee. Operating lease is a lease does not transfer substantially all the risks and rewards incidental to ownership of an underlying asset. Risk and reward. Risk is include the possibilities of losses from ideal capacity or technological obsolescence and of variation in return because of changing economic conditions. Reward. Reward may be represented by the expectation of profitable operation over the asset economic life and of gain from appreciation in value or realization of residual value. Indicators of finance lease. Number 1, transfer of ownership. Example dito is yung rent to own. Number 2, bargain purchase option or BPO. Ito yung binibenta ng bagsak presyo na or sale. Number 3, lease term is at least 75% of the useful life of the lease asset. Majority ng useful life asset ay si lessee ang gumagamit. Present value of lease payment is at least 90% of the fair value of the lease asset at the inception date. Kailangan yung present value of lease payment ay at least 90%. And last, lease asset is of specialized nature. Other indicators of a finance lease. If the lessee can cancel the lease, the lesser loss associated with the cancellation are borne by the lessee. Ito ay yung transfer of risk. Gain or losses from the fluctuation in the fair value of the residual occur to the lessee. Ito naman yung transfer risk and rewards. C. The lessee has the ability to continue the lease for a secondary period at a rent that is substantially lower than market rent. Ito naman yung transfer of rewards. Inception and commencement of lease. Inception date is the earlier of the date of the lease agreement and the date of commitment by the parties to the principal provision of the lease. A lease is classified as either an operating or finance lease. 2. Commencement date is the date of which a lessor makes an underlying asset available for use by lessee. It is on this date that the lessee is entitled to exercise its right to use the leased asset. Finance lease initial measurement. A lessor recognizes an asset from a finance lease as the receivable measured at amount equal to the net investment in the lease. Gross investment in the lease. Lease payments receivable plus any unguaranteed residual value equals gross investment. Gross investment in the lease times interest rate implicit in the lease equals net investment. Gross investment minus net investment equals unearned finance income. Lease payments. Lease payments include the following. 1. Fixed payments including in substance fixed payments less any lease incentives payable. B. Variable lease payments that depend on an index or a rate. C. Guaranteed residual value. D. The exercise price of a purchase option if the lessee is reasonably certain to exercise the option. And last, payment of penalties for terminating the lease. Discount rate. The net investment is measured using the interest rate implicit in the lease. Subsequent measurement. The net investment in the lease is subsequently measured similar to an amortized cost financial asset. Mini-measure siya similar to an amortized cost financial asset. Finance income is computed using the effective interest method and recognized in profit or loss. Illustration of finance lease. On January 1, 20X1, ABC Co. leased a piece of equipment to XYZ Incorporated. Information on the lease is as follows. Yung cost of equipment ay nagkakahalaga ng 303,735 pesos. Yung useful life of equipment ay 5 years. Yung lease term is 4 years. Annual rent payable at the end of each year is 100,000. Interest rate implicit in the lease is 12%. Finance lease ang gagamitin dahil 5 years ang useful life. Initial measurement. Fixed lease payments is 100,000 multiplied by lease term na for 4 years equals gross investment in the lease na 400,000. Fixed lease payments na 100,000 multiplied by present value of ordinary annuity of 1 at 12% and 4, 3.03735 equals net investment in the lease 303,735. Gross investment na 400,000 minus net investment na 303,735 equals an earned interest income na 96,265. Ito naman yung journal entry and subsequent measurement. The lessor does not recognize depreciation because the lease asset is already derecognized. The lessee will be the one to depreciate the asset. Initial direct costs. Initial direct costs are incremental costs of obtaining a lease that will not have been incurred if the lease had not been obtained, except for such costs incurred by a manufacturer or dealer lessor in connection with a finance lease. Classification Classification of finance lease by the lessor. Directing finance lease. A lessor acquires assets and leases them with the intention of generating income through interest. Sale, Sales type lease. The lessor is the manufacturer or a dealer of the asset being leased and use leasing as a means of marketing its products. May option siya kung bibilhin yung asset or ililish niya lang. Sale type lease. Sales revenue measured at the lower of the present value of lease payments discounted using a market rate of interest and the present value of the asset. Cost of sale using equal to cost or carrying amount if different of the underlying asset less the present value of the unguaranteed residual value. Gross profit, the difference between revenue and cost of sale. Residual value, si lessee who account for guaranteed residual value only. Yung kay lessor naman, account for both guaranteed and unguaranteed residual values. Residual value is guaranteed if guaranteed by the lease, a party related to the lessee, a third party unrelated to the lessor that is financially capable of discharging the obligation under the guarantee. Yung guaranteed is added to sales and unguaranteed is deducted from cost of sales. Lease modification. Separate lease. Yung separate lease is a lease modification is accounted for as separate lease if both the if both the scope and consideration in the lease are increased due to the addition of a right to use or more underlying asset, and the increase in the consideration reflects the standalone price of the increase in scope. B. Remeasurement or the recognition of the net investment in the lease. Operating lease. A lease does not transfer substantially all the risks and rewards incidental to ownership of underlying asset. Recognize the lease payments as income on a straight line basis over the lease term, same as the recognition as exemption available to a lessee from short-term and low-value lease. Initial direct cost. The lessor capitalized the initial direct cost to the carrying amount of the underlying asset and recognized those costs as expense over the lease term on the same basis as the lease income. Depreciation. The lease asset remains the asset of the lessor. Therefore, the lessor continues to depreciate it. Under an operating lease, the lessor does not recognize any finance lease receivable. Hindi niya nare-recognize ang finance lease receivable. Lease bonus. The lessor accounts for a lease bonus as an earned income and recognize it as income over the lease term on the same basis as the lease income. Rentals. The lessor accounts for advance rentals as an earned income and recognize them as income only when they earn. Ang advance rental ay unearned income na nire-recognize lang kapag ang income ay na-earn na. Security deposit. The lessor recognizes a security deposit received from the lessee as payable, measured at amortized cost. Nire-recognize ang security deposit received from lessee as payable. Minimeasure siya at amortized cost. Illustration 1 for operating lease. On January 1, 20X1, lessor enters into a year operating lease of equipment. The annual lease payment payable at the end of each year as follows. Sa 20X1, may 8,000 siya. Sa 20X2, may 12,000 siya. Sa 20X3, may 14,000 siya. The annual lease income is computed as follows. Sa 20X1, yung 8,000, itatimes mo siya sa 6 divide 12. Kaya magiging 4,000. Yun, sa 20x2 naman, ilalagay mo lang din na 12,000. Katulad din ng 20x3 na 14,000. Ang magiging total list niya ay 30,000. Di-divide mo siya sa list term including the rent-free period. The annual list income is 10,000. The first 6 months are rent-free. List modification. A lease modification, a modification to an operating lease, is accounted for a new lease from the modification date. Na-account siya as new lease from the modification date. Lease of land and building. When a lease includes land and building elements, a lessor assesses the classification of each element as a finance lease or operating lease separately. The useful life or 75% criterion does not apply. Presentation. Underlying assets subject to operating lease are represented in the statement of financial position according to their nature. Subleases. A transaction for which an underlying asset is released by lessee to a third party, and the lease between the head lessor and lessee remains in effect. Pinaparent sa third party yung underlying asset na nire-release niya sa lessor. Illustration. On January 1, 20X1, Entity X enters into a 5-year lease of a building from Entity Y for an annual rent of 100,000 payable at each year end. The building has a remaining useful life of 20 years. The interest rate implicit in the lease is 12%. Entity X uses the straight line method of depreciation. Ito naman yung subsequent measurement. Sa right of use asset, yung cost niya ay 360,478. I-divide siya sa lease term na 5 years. Annual depreciation niya is 79,096. Sales and leaseback transaction occurs when a party sells an asset and immediately leases it back from the buyer. The seller becomes the lessee while the buyer becomes the lessor. Si seller nagbenta na asset kay buyer tapos si seller ililis din niya ito. Illustration, sales and leaseback. On January 20X1, Entity X sells a building to Entity Y and simultaneously leases it back. Additional from is filed. Yung fair value of building is 1 million. Carrying amount of building is 800,000. Remaining useful life of building is 10 years. Yung lease term niya is 5 years. Annual rent payable at the end of each year is 100,000. Implicit interest rate equal to market rate is 12%. Step 1. Lease liability. Fixed lease payments is 100,000 multiply sa present value ordinary annuity at 12% is equal to 3.60478 is equals of present value of lease payment na 360,478. Step 2. The right of use asset. Entity X seller or lessee measures the right of use asset at the proportion of the previous carrying amount of the asset that relates to the right of use it has retained. Right, right of use asset equals carrying amount times present value of lease payments divide fair value of asset. 800,000 times 360,478 divide 1 million is equal to 288,382. The journal entry is cash na 1 million, right of use asset na 288,382, building na 800,000, lease liability na 360,478, and yung gain niya 100,027,904. Buyer-lessor accounting. Entity Y uses an applicable standard to account for the purchase and PFRS 16 to account for the lease. None of the indicators of a finance lease is present. Therefore, the lease is classified as an operating lease. Entity Y will recognize the lease payments as lease income over the lease term. That's all. Thank you.